Hello everybody, welcome back to another weekly market review for F45 Trading. Just going to take a quick second and direct you to our website here. If you haven't done so before, we've got some amazing options there for you to get some real in-depth market insight on the Forex pairs that we're going to be discussing today, and several other commodities as well too. Keep in mind these are my own opinions only, not to be constituted as financial advice or investment advice, of course. Trade at your own risk, and do not let anything I say here dissuade you from doing what you're going to do originally. So anyway, with that little snippet, let's jump into this real quick here. Jumping on a Forex Factory, we can see what we got coming up for the week. A fairly, I wouldn't say a quiet week. We obviously have a couple of landmines here on Thursday that you definitely want to make sure you're aware of. We have EU economic forecasts, and we have the pound sterling Bank of England inflation report, MPC official bank rate, and monetary policy summary, and then the official bank rate. So what this all means is they are going to make an interest rate decision. Now, if you look over here, we have the forecast predicting it to be unchanged from the previous interest rate decision. So what that is going to do to the markets, we'll have to wait until Thursday. But just so you know, that is coming, and you probably don't want to have any open positions on the any GBP cross pairs until after the news. And that's about it really for the week. We've got a rate statement for the Australian dollar as well too. That's coming Monday late in the evening, so we should see the Australian dollar jump a little bit. And then we have ECB President Lagarde, I believe is how you pronounce that, which is coming up at 2:30 p.m. Monday. So we could see a little bit of action there. But for the rest of the week, we have the normal volatility injections as expected. Apart from the massive landmines on Thursday, it should be pretty much clear sailing. So, jumping in the charts, we obviously see that the US dollar has come off of its highs from last week. We saw the Wednesday interest rate decision for them to drop a quarter basis point rate there. Let me zoom in for you here, a little clearer, right here. And really all that did was just basically run the stops above these old highs here and reject aggressively. And Wednesday was a straight down day, Thursday was a straight down day, and Friday was a straight down day as well too. I'm going to take out this day divider, clear that up a little bit. You can see Friday just ran above Thursday's high there a little bit and dropped. And now here we are here back at this red line here at 96.75, 96 or 9,700 basically. So what's going to happen this week? Well, I personally believe we're going to see the price of US dollar run lower. Now, could we get a little bit of a bounce up into here before it does that? Absolutely, and I am looking for that. Now, again, we had this run higher on Friday. So I'm going to go down to an hourly chart here and show you, and I'll put the day dividers back on. Now you can see this was the interest rate decision on Wednesday, where they cut a quarter basis point to lending rates, which sunk the dollar. Then we had Thursday basically go straight sideways and do nothing, and then Friday we had NFP news come up and just take out the high from Thursday. And so far we haven't been going anywhere. So what does this all mean? Well, I'm looking at two areas right now. I'm looking at the area right here to see if they have any strength whatsoever to come up there. I'm not going to discount that, and that comes in at about, we'll call it about 97. I think 97.35 would be a bit too high. I'm going to call it 97.30. That would be a nice number that I'd like to look for. If 97.30, if price, as long as they do not close above 97.30, I would remain bearish on the US dollar. Now, what they could do, we have a little bit of an area right above the consolidation levels right in here. And I'm going to say right about here is where I'm looking for price to not go any higher. Or I'm watching this area. So what I'm basically watching two things. I think we're going to probably see price run a little bit higher going into Monday. But do they come up above 97.15? That's what I want to see. If they do, I'd be looking for a quick sweep above this level, this high rate here, not going any higher than 97.30. And then them to go lower. Now, if they get back up into 97.30 and come back and start trading into this consolidation range in here, these candles from last Wednesday, then I think that there's a very strong likelihood that this could be quote unquote support down here, and we could make a run for this high. I think that's very unlikely. I think that would be maybe about a 10% chance of happening. I think what we're more than likely going to see is price will probably come run up into here. We'll probably see some resistance right about the 97.15, maybe 97.10 level, and then we'll probably see price drop back down. If, however, like I say, they get above 97.15, I'm going to have sort of two fail-safes here. So this is absolutely my line in the sand, 97.30. If we cross above that, close above that, I'm going to abandon all notion that this is going to go lower, and we'll look for higher prices to come. What I think is more likely to happen, like about an 80% chance, if we get a run back up, 97.15 will probably act as the resistance, and we'll probably see price roll over from there. So where are we going for the next, for the rest of the week? Let me go back to a daily. I think we'll easily get below this low here that we had from mid-October, and I think there's a very good chance, and I'll extend this line out here. If I can get a hold of it. I think we'll probably be below this low here. It may take 2 weeks to get down there. I'm not guaranteeing that it's going to get below that. And if you look at this, it took them a week to give back that 60 pip range. And if we look, we need about another 60 pips, 70 pips almost to get below those lows. It is certainly possible that we'll see a massive run lower here this week, but don't be tripped up if we do consolidate a little bit before it drops. We've had a nice little mover here last week, so price could hold up a little bit. But I think I think the writing's on the wall for this pair. If we do get a move higher, I think lower is going to be the way that we're going to ultimately go. If we do start running lower, this is going to be my target down here. Okay, and ultimately my target here for the month of November is going to be 95.90, 9600, or sorry, 96 big figure to 95.90 is what I'm looking at for the month of November. So if we look at that, obviously that constitutes the same move on the Euro USD as being a move up to 113.40 at a minimum. We could, and I will put it on the chart just to have it on here now, because I believe we are fairly safe to say that we are going higher. We could see a move all the way up to 14. The high on this candle is this candle right here is what I'm looking at. Comes in about 114.13. We could easily see a move up to 114.20 above that high there. That is a long ways away from where we are. If we do get above this high, that would be kind of more towards the end of the year, end of November certainly, and maybe even into December. It's going to take them a little while to get up there. And if you look at where we've come from, this low here, back in the 1st of October, it's taken a month to run 300 pips. So another 250 to 300 pips, right, could be another corresponding month on that. So just keep that in mind. But I think, again, for this week in particular, as long as we see that big move lower and we get below this low here, that being the target on the US dollar, I think that's a fairly easy run up to the 1340 level. Certainly up above these highs here at 1256. So really it's only 100 pips away, not too far away from current location. 100 to 120 pips away. And so I think that's a very easy target for the euro. Should be able to do it. And I think what's going to happen we'll probably see the pound dollar consolidate for better part of this week, and then we'll see Thursday it really taking off. And I think what's going to happen is we're going to probably they'll probably allow the Euro USD to move a little bit with that pound dollar consolidation. Now, pound dollar, again, we've seen very similar upward momentum on the pound, very similar consolidation as what we've seen, big decline on the US dollar, a little bit of a consolidation. Again, exact opposite, big increase and a little bit of consolidation. So we're seeing the same thing here, except on a little bit larger of a scale. So the Euro USD had about a 200 and some pip move. The pound dollar has had 4 times that amount. So needless to say, I think they're going to head up to the 13200 level. I think that's a very, very easy target for them to get to. As long as everything keeps going the way it is and we still see bullish activity, then we'll easily be above there, and probably this week. Again, that's only 250 pips away, and you can see an 800 pip move, and it really only took them about 2 weeks to do it. So 200 plus pips is not a problem for cable to do. They could do that in 1 day if it wanted to. So that's where I'm thinking it's going to go. Now, again, I'm not going to do anything with the cable until after Thursday, and potentially into next week we can look at it. We had a Brexit deal that was pushed off and extended into next year, and so there will be lots of volatility with this pair, and don't be surprised if you see big days like this where we just get some very, very whipsawed price action. Be very careful with cable if you are going to trade it. Make sure you have reduced your liquidity, reduced your risk significantly, and keep your stops pretty tight on it. Don't give it a large margin to run, because it will run on you if you are wrong. So anyway, that's cable, that's Euro USD. I'm trying to keep this very, very short today. Euro GBP is, again, still no help to us. We are really consolidating in here, and this could be indefinite, at least until the end of this week anyway, until the pound sterling's comes out with their monetary policy report, or official bank rate. Okay. US CAD, I believe it will do the exact same thing what the US dollar is doing. US dollar obviously ran up and rejected. US CAD, it did run up and it did reject. It hasn't done it as strongly as the US dollar has so far, but nonetheless, very nice run up into this area that I was looking into, and so far a very nice rejection. You can see that big rejection from last Friday's NFP and lower, and I think there is a very, very likely chance that we could be below. We'll definitely be below this low here, I think, this week. Do we get below this week? They could save that for next week or a little later on down the road, but I definitely think we are heading much, much lower on US CAD. And again, now just FYI, we do have a little bit of a gap here that I noticed on the 1 hour. We could come up and try to fill that gap, so just be aware of that. If you are short on US CAD, or you're thinking about entertaining any short positions, there is a possibility, very small one, that we could run up into here. But I think that them taking out this high, the danger of them taking out this high, as long as the US dollar keeps going south, I don't believe that danger is very real for them to take out that high, but there is a bit of a gap here. I just want to let you know, and just so you notice it on your charts and mark it out on this brokerage feed anyway. Yours may be looking a little bit different, certainly, and certainly in the futures contract it could look much, much different as well too. So, but we could see a bit of a return and then a rejection down, but I am looking for lower prices on US CAD. Australian dollar and I've said it before, is trading very, very nicely. If you guys have watched any of the past reviews and since the end of September, I said that really Australian dollar is just been absolutely playing out perfectly, and I believe there's more of that to come. I'm looking for them to run above this old high up into here, which comes in about 70. Yeah, you could call it 70, 80. For even numbers' sake. but lots of upside room there. Now, it's not going to be a straight shot right up there. You know, we'll keep doing more of this and just slow increments. So the Australian dollar typically, the average daily range tends to typically be about 40 to 50 pips. So again, if we're looking at a couple hundred pips higher, it's going to take a little while to get up there, and especially if you consider retracement days in there. So, but I definitely think, again, by the end of this month here, November, that we will certainly be above this level here, and possibly, just to divert your attention up to here as well too, we have a lot of area up here that I think price is very interested to go to. So I think ultimately, even if we get a really nice run on this pair, we could even be above here before the end of the year. Okay. So that's that. Want to talk quickly about gold. Gold obviously usually does the inverse of what US dollar does. We can see gold has really been consolidating very strongly up until, coincidence, last Wednesday, where the US dollar lowered their interest rate and significantly, the price significantly dropped from there. Gold had the exact opposite reaction. We saw a nice big jump up and increase in price. And last Friday, this was the NFP news results. We saw that capitulation there. Now, I don't necessarily think there's a lot of danger of them going below this low from Friday, but I definitely want to let you know that it does exist. It is there. They could want to run down and bring price into this area in here, back down to the 1500 level. So just watch for that. But I think there's a very strong likelihood that we probably won't see price run through here. I would imagine we'll probably, you know, move lower a little bit from here, but I think this area in here will probably, basically this consolidation level will cause a little bit of support, and we'll probably see price jump from there. If we do, however, break through this level of consolidation, keep in mind they could just do a real quick stop sweep below this low. For everybody in here who was getting long, and then they see this low here and they all jam their stops up under here, thinking, oh, that's going to be, you know, support right here. They're definitely not coming back down there, and just to come back down one more time and hit it. So I just want to put it on the chart just so you're aware of it, and yeah, you can obviously capitalize on that if that does happen, or, you know, again, have a wider stop just in case. So that's really about it. And this, again, and I usually start, and I apologize, I didn't do it this time. This review is for the week of November 4th to the 8th, 2019. So a little bit of a timestamp. Apologies, I usually start out with that. I forgot to do that. And again, guys, if you have any questions at all, please go ahead and jump onto our website. You can find us on social media, Twitter, F45 Trading. I mean, there's so many avenues and so many different media points where you can get a hold of me. If you have any questions whatsoever, I'm more than happy to help you out. Obviously, we do have a paid member service, and if you want to get daily updates on levels in these charts that we talk about in much more detail than what I discussed here, as it's happening, before it's happening, then go ahead and go to f45trading.com, or like I said, just shoot me an email at f45trading@gmail.com, and I'd be more than happy to help you out as well too, any way I can. So thank you very much for watching, everybody. With that, I'm going to leave you for another week, and if you're a member, I will see you in the chat room tomorrow, and we have our next live market discussion scheduled for the same time, Tuesday morning, London Open. So until then, we'll catch up to you later.